The $4 trillion market, and we're going to teach you how to trade it right now. So let's get to the money matchup. And the story this week is the dollar demise. The Dixie, the dollar index, now falling to the lowest in 16 months this week, declining against commodity and safety currencies alike. And Andy, at what point do you call it a crisis? Because even though it's a third weekly decline, it's been orderly.
Right, and that's the thing that disturbs policymakers. It's really a question of the speed, and I think, you know, let's take a look at this. Let's look at the big picture with the dollar. I mean, over the last 10 years against the U.S. dollar index, it's down about 31%. In the last 5 years, it's down about 5%. I'm sorry, about 37% against the Brazilian real. And just over the last year, the dollar is down about 30% against the Australian dollar. So however you want to slice and dice it, it's moved significantly, and it's very worrisome for policymakers. And I'm not really comforted by what the Fed's been saying recently, as they've been a big driver of why it's down here.
What do you think, Brian? Where's the dollar headed?
I think that, I mean, it seems like the dollar's headed lower, right? I mean, that's the policy that we have. That's what Bernanke's prescription for. This is what everybody wanted. I'm not sure if there's a crisis yet. Other countries have kind of thrown up their hands and said, we're going to let our currencies go. I wouldn't call it a crisis at all yet, but the dollar is going lower.
By the way, Brian, welcome to Money in Motion.
Well, thank you
it didn't even occur to me to welcome you because I see you so often on Fast Money. Yes. But welcome. Rebecca is actually in D.C. at an IMF meeting, so we'll check in with her a little bit later on in the program. But Andy, walk us through what you're looking at in terms of the dollar versus what currency.
Right. So what we want to do is you know, think about this. If you're currency trading, you always want to take that approach. You want to look at maybe 10 years, 5 years, 1 year, down to a month. Because the idea is to go with the trend. That's the easiest way to make money. You're fighting against the trend. It's like trying to swim upstream, right? So we always want to figure out what is the trend and follow it. So in my particular trade, I'm looking at, of course, selling the U.S. dollar. Now, there's a lot of different ways you can do this. I'm looking for a pullback in the dollar. Now, in other words, the dollar to strengthen a little bit before we get into this position. But I'm picking an easy one out there. So I want to sell the U.S. dollar against Norway. I think I've got it down. I want to entry at 553.5. I want the stop loss to be at about 564.25, but I'm looking for a big move down to about 505 before I take profit on this. It's almost a 5-to-1 return, but it's a great example of how to trade the bigger picture with a medium-term trade. We have wider stop losses for our positions because we're going with the trend, but we expect more profits because of that.
Now we are going to check in with Rebecca Patterson of J.P. Morgan, joining us from D.C. today. Rebecca, I want to get your take on what you think about the dollar, selling the dollar against the crown. Obviously, it's an oil currency, so you got that upside working in its favor.
Yeah, no, I like this trade a lot. I do think it's going to be bumpy along the way. If Libya, for example, calmed down a little bit, oil prices came off a little bit, Norway might give up some ground. It's a big oil exporter. But I agree totally with Andy. The trend is your friend here. I know it's cliched, but it's true. And Norway has a huge current account surplus. They have tightening monetary policy because they have a strong economy. I think it's going to attract more capital inflows, and Norway will strengthen this year. It's going to work.
All this talk about trends, we've got to go to one place and one place only. That is Todd Gordon of Aspen Trading, who is at the Money Map at CNBC headquarters. Todd, what do you see in terms of the pattern, dollar versus crown?
Sure, I think they're both right. And actually, even before I saw the lineup this morning, we went short dollar Norway this morning. So I like the trade even on a micro term. It was really underperforming the overall dollar strength. So it's important to be short the dollar against those stronger, high-yielding commodity currencies. But I think heading into the IMF, it's important to take a look at the dollar against some of the G7, the more developed currencies. This is the dollar index representing the U.S. dollar trend against those G7. Heading into the IMF, take a look. We have a very key pattern developing here in the daily dollar index. There's a support that's defined by an Elliott triangle. Okay, we're looking for 5 legs. To count them: A, B, C, D. We're holding the D leg. If the market holds the 74.15, technically speaking, that's a successful test of support, and something is going to push this dollar higher. So technically, we're very oversold.
You know, I think that's a great one to look at because it does give you an overview of what's going on with the buck overall. And again, you know, try to just stay with the overall trend until we see the Federal Reserve give us any inkling that they're going to start raising interest rates. I mean, that's kind of the key. The Fed has been such a big driver of what's happened. If you look at an entire decade, they've interest rates at extremely low levels. Then we went through Q1 and then Q2. And of course, now we have other central banks raising rates. We have the ECB raising rates, we have Sweden raising rates, and we have like Brazil raising rates. They're up 100 basis points this year alone. So That's why I want to try to figure out a good place to get in.
You know, and Andy, and keep in mind, we could get dollar strength not from central banks raising, but what about good old-fashioned risk aversion? What if this S&P double top takes form and we go back to buying the dollar, the worlds go back to buying the dollar for safety? Could be a technical bounce on something else, on poor news.
Yeah, I mean,
Go ahead.
I'm not sure that actually the dollar is that safe haven anymore. I mean, we've seen the euro strengthen considerably,
for
and the
instance,
Swiss franc. But even, you know, I mean, in terms of a big currency where you can actually get some size, particularly in fixed income, the euro is the place for me right now for safety.
All right, so let's give you the bottom line here. Andy says sell dollar against Norway at 553.5. And if this is the first time you're watching the show, your first chance to make that trade Sunday, 5 p.m. Eastern time. All right, moving on here. You may have noticed that Rebecca is not on the desk. We mentioned that. She is at the annual IMF meeting in D.C. Some call it the Super Bowl for currency traders, and here's why it's important. It is where all the major policymakers are meeting, including central bank governors as well as finance ministers. The news that comes out of this meeting can move currencies. So, Rebecca, you've been in a lot of meetings talking to a lot of important people. What are the headlines?
Well, if I had to boil down what I've heard so far today, it really comes down to one thing. The world is accepting a weaker dollar. And this is a big change from 6 months ago. 6 months ago, you had Brazil calling the weak dollar a global currency war. You had huge intervention. Intervention's continuing, but emerging markets are now saying, I'm more worried about inflation than exports. So they're letting their currencies strengthen. And I even spoke to a few Europeans today who were pretty sanguine about the fact that the euro's gone up 8% year to date, 144 on euro dollar. They're okay with it. So I think everyone's just coming around to a view that the dollar's going down. We can't stop it. So let's just deal with it.
You know, and I think a great point on that, Rebecca, is that the Brazilian real since March 28th is up 5%. But what's astounding to me is the emerging markets and the strength of their currencies and the allowing of the currency to strengthen without fighting it. To me, that is really a game changer because we know that they've been the biggest accumulator of U.S. dollars and, of course, U.S. treasuries as well.
And I think for folks who are trying to trade this, what's important is that if you've been long Singapore, you've been long Brazil, Mexico, any of these currencies, and you're saying, gosh, should I lock in profit? They've moved a lot. I feel that this central bank shift suggests that you can hang on to your short positions in the dollar, long positions in these other currencies a little while longer. If you've already reached your take profit level, maybe stretch it out a teeny bit more. I think we have room to run.
In terms of the central banks around the world allowing their currencies to appreciate, that is happening definitely in emerging markets. We've seen it already this week. But in terms of, say, the Swiss National Bank, we had headlines today. They're talking about it being a potential problem for their exporters. We heard it when Nestle reported earnings, that the strong Swiss franc was a headwind for Nestle. At what point do you think, you know what, they might step in and may not do something formal, but may go in to talk down the currency?
Well, I think that's somewhat what they're trying to do today with those headlines. I mean, the Swiss National Bank got their face ripped off on the currency intervention trade, so I don't see them going back into it anytime soon. But, you know, just everybody saying that the dollar is going lower in acceptance, the trader in me wants to take the other side of that trade so bad, but the fundamentals just don't support it. But I'll tell you, it's compelling.
I think the thing is you can always take the other side of that trade, and that's totally cool. But for the novice traders out there, the key thing to keep in mind is when you go against the trend, keep your stops really tight because you're going to get blown out at times because you're going against the flow of the river. So that's okay, totally cool, and I agree, and I do it all the time. Lose money, no. But put on the opposite trade because you want to take advantage of an overreach in currencies.
Right.
Always overreach.
Yeah, but the fundamentals don't line up. That's my only problem with, but just the gut feeling says take the other side of that trade.
Rebecca, what have you heard in terms of the headlines coming out of the Swiss National Bank sort of talking down their currencies? The euro, same problem there where it's a headwind for their exporters, and that could be a problem. Talk there down in D.C. about that?
That's the thing that's killing me. I'm not hearing any of it. They all seem really calm about it. And I'm not trying to say that we're no longer going to have intervention, verbal or actual intervention, but I think it's more to smooth the trends rather than turn things around. And sure, there's always a cost to it. If you have a strong currency, your exports are going to get hit. But if you're starting to think inflation's a bigger worry, the strong currency helps control that. I mean, in the case of the euro area, even with all the problems in the periphery, euro area CPI out this week at a new cycle high. They have inflation back in Europe, and the strong euro helps them.
Do you think they have 7-layer dip at the Super Bowl of currency traders?
I would hope so.
I mean,
Yeah.
you gotta. All right.
I'm not telling.
G7 layer dip.
All right, we got to take a break. I have a question about currencies. Go to our currency class. It's our web extra segment, and that's at moneyin.motion.cnbc.com. That is right after the show. Here's what's coming up next on Money in Motion.
The market's next big worry, the inflation situation. But fear not, currencies are coming to the rescue. We'll show you how you can use foreign exchange to protect and profit from frightening price spikes when Money in Motion continues.
When crimes happen inside the U.S. Navy,
Have an officer missing.
only one elite law enforcement agency
My suspicions was that he was the victim of foul play.
will honor and protect those who serve.
I knew that we had the right guy.
The Real NCIS. All new series every Monday night at 9, only on CI.
On Fox, there are two ways to fight crime. The good way.
Drop your weapon! Do you think you can hear me?
Or the bad way.
Why would you do that? Because I am a cop!
Don't miss The Good Guys. Mondays at 9:50 p.m. on Fox, Astro Channel 710.
Once upon a time, a fair maiden and a handsome prince fell in love. The course of true love never did run smooth.
The amount of scrutiny on Kate had become basically unbearable.
But the fair maiden braved all odds, and they lived happily ever after.
Kate Middleton would be a perfect 21st century princess.
Kate Middleton premieres April 22nd, Friday night at 9 on Bio, Astro Channel 731.
April is Super Sports Month on Astro. Rugby, badminton, and football. Take it up a notch on Astro Super Sport.
That is a quite wonderful strike.
The giants of the court battle in the ATP on Astro Super Sport 2. And the big guns rage on in the BPL pitch and the NBA court on Astro Super Sport 3. Golf Channel delivers the PGA and the LPGA's biggest events.
That's the kind of putt you want for a championship.
And Eurosport slaps it with the WTA tournament and basketball Euro Cup. Watch the FA Cup semi-final and F1 action on Star Sports.
And the checkered flag will wave for victory.
And to round it off, the MotoGP and UEFA Champions League on ESPN.
The close to goal and finds the net.
What are you waiting for? Get your sports fix. Call to subscribe now.
Weekdays, Karen Cho.
Welcome to The Call.
Hong Kong Preview, Energy Call, China Focus.
Take a look at the market reaction.
The Call to Action.
What's your top trend?
Get the lowdown.
What you need to be doing with your money.
The Call, weekdays at 9 a.m. only on CNBC.
Welcome back to Money in Motion. It is the word that strikes fear in the heart of stock and bond investors alike. Inflation. But it can be a good thing for currency traders, and here's why.
Cotton prices up 122% in the last year. Corn up 107%. Crude climbed 27%. Forget what this guy says.
Because of the great deal of slack in the economy, that inflation is likely to stay quite low.
Inflation is here, a nightmare for stock and bond investors, but perhaps an opportunity for currency traders.
So you really want to anticipate when a central bank will begin to hike or cut rates, and then you can definitely either go long or short the currency.
So how can you use currencies to protect your portfolio?
So let's get to it. Rebecca, if you want to play currencies for inflation, what do you need to look for first?
Sure. Well, kind of obvious, but if a country has inflation, you want a central bank that's going to be very hawkish, that's going to be ahead of the curve, that's going to be raising rates. And exactly to your point, Melissa, not always a good thing for stocks, probably not a good thing for bonds, but for currencies it's great, because currencies with rising yields, especially if you have growth and inflation, tends to lead to more capital inflows, so the currency strengthens. We saw Singapore this week. Singapore dollar got to a new all-time high against the U.S. dollar as the Singapore tightened monetary policy. They're fighting inflation, they're credible, better yields on your Singapore assets, and the Sing dollar goes up. That's exactly what we're looking for.
Beeks, how do you narrow that list down? Because we had just talked about the fact that so many central banks around the world are dealing with inflation and they're in a rising rate sort of stance.
Yeah, I mean, I think probably the easiest way to go about it is to just look for the countries that produce the goods that are going up. I mean, it sounds simple, but it's the commodity currencies that you want to be in. I would say those trades are a bit long in the tooth, so you want to shorten up your time frame a bit. For me, I tend to be a little bit longer because I don't like to get up at 2 in the morning to watch the trades, so it might be a little too long for me. Guys like Andy, I know.
He's up at 2.
Yeah, that's right. Well, I mean, from the inflation standpoint, I mean, we had the CPI out this past week, and that certainly provided a lot of comfort for people wanting to buy bonds, because now they feel that the Fed is vindicated in keeping their interest rate policy where it's at. So that's just a turbocharger to sell U.S. dollars. And Singapore, just as an example, you know, not quite an emerging market, but I would say they lowered their band of what they allow it to trade around. Again, here's another country allowing their currency to strengthen to deal with the inflationary impacts that are going on. To me, this drives the overall trends for the dollar down.
All right, Rebecca, you got a lot of choices in terms of inflation play currencies. Which one are you looking at?
Well, I agree with BK here. I'm looking at a commodity currency, the Australian dollar. And you might think, Rebecca, are you serious? You're buying this thing at the top. The Aussie dollar got above 105 in recent weeks, which is the strongest level we've seen since the early 1980s. So I want to wait for a pullback. And I think next week might be perfect because we have a short trading week in the United States. I think you could see profit taking ahead of the FOMC meeting at the end of April. So the dollar might get a little bit of a temporary bounce. It's just on profit taking. If that happens, we see Aussie dollar getting back down to around 102. That's going to be my entry level. And I'm looking to buy the Australian dollar against the U.S. dollar around 102. I'm targeting a move to 107, and that would be a new high for the Australian dollar. But I think that this trend is going to last. Australia's terms of trade, and that means their export prices versus their import costs. If you look at the last 5 years, it's at a highest level it's been in a century. So there's a terms of trade shock going on, which is super positive for the currency.
All right, let's get the technicals on Aussie U.S. dollar. Todd, at the money map, what do you say? You know, to BK and Rebecca's point, actually, technically speaking, the trade isn't long in the tooth. Look at the channel that's been in formation since 2008. The top side, if we break from this little consolidation pattern, is up around 115. So actually have some room to go, and technically it makes sense. So take this little triangle consolidation from 102. Let's dial it into the intraday charts, and let's see if we can refine those entries a little bit to control your risk. Here's the 102 break, and like Rebecca said, I think she's right on with wait for a pullback, but substantiate that. We've got the break of resistance around 102. We've got some Fibonacci support levels that will come in at 102.40 and 101.40. The final bottom retracement, it's not labeled, but it's the 61% retracement. I don't think you need a stop loss too much below that level. So I think Rebecca stops around 99. I would say push it up a little bit, control your risk. Technically, it's a good setup.
The only thing I want to add to Rebecca is that I think we can get your 102 if we get better than expected housing data out of the U.S. next week. So we're going to see a whole bunch of data on that. Obviously, that's been a sore point for the U.S. economy. Brian, I'm curious, what do you think? You mentioned a lot of these trades are long in the tooth. This seems like one of those trades.
It is. I think it is a bit long in the tooth. I mean, I understand the technicals, but I guess at some point, inflation does cure itself. And you start to see that demand destruction. And when that happens, this whole trade can reverse. I don't mind this trade. I actually like the Aussie yen a little bit better because I think the yen is going to be going down.
Rebecca? And BK, I like that cross as well. I like Aussie yen, but I think given what we have going on in the U.S., less central bank inflows, people worried about our debt dynamics, Fed's going to be on hold for a while. I think the dollar is also a good way to play it. Next week, we also get minutes from the latest RBA meeting. If they're a little more two-sided on policy, also another opportunity to get that pullback to 102. But when you think about demand destruction from the currency, it's just not happening seen yet. The prices that Australia can charge for its commodities is the best they've seen in many, many decades. And that's creating a lot of interest in investing in Australia. It's creating wealth among the Australians, and it's making the Reserve Bank of Australia pretty happy with what's going on.
I mean, tied up in all of this is, for instance, gold. Gold hit a new record high in today's session, and that is a huge commodity coming out of Australia. So there you have it.
Yeah, a lot of things that China wants, obviously. And I'm not so sure about BK's inflation cures itself. I've never seen that. I've never experienced that, but maybe it potentially can with demand destruction.
Right, that's the idea. I mean, at some point, you can't afford anything anymore. You don't eat anymore, you know?
You drive less miles.
You drive less miles, you eat ramen noodles and cheap beer.
Ramen noodles.
In your bunker. All right, let's get
turkey, the hills, all
let's give you your bottom line here. Rebecca's inflation hedging currency trade is to buy the Australian dollar against the U.S. dollar. Your first chance to make that trade, Sunday, 5 p.m. Eastern time. All right, coming up next, check out that chart here. Todd Gordon says there could be money in it for you. He will explain why right after this.
In the still of the forest, where the great grey owl keeps a watchful eye, fairy tales come to life. Mythical, magical, legends of yore, cloaked in mystery, steeped in lore. Europe Uncovered, Wednesdays in April on Animal Planet.
All Lexi ever wanted was to skate.
Junior championships are in Cedar Rapids this weekend.
No way to sign up.
But she's about to get more than she ever dreamed.
Lex!
I can't see.
In tragedy, she will find her courage. In love,
So we've been skating on this pond our whole lives. Nothing's changed.
she will find her inspiration. Ice Castles. Premieres Sunday, April 24th at 7:15 p.m. on HBO.
This weekend,
Sushi and sashimi, are they on or off the menu? Many countries have either curtailed or banned Japan products outright. The Hong Kong Federation of Restaurants estimates that 1/4 of Japanese restaurants could go out of business as a result of the ongoing nuclear situation. This week, we'll meet with a leading name in the Japan culinary space only on this week's edition of Straight Talk.
Straight Talk with Bernie Lowe. This weekend on CNBC Live. This weekend on The Tonight Show with Jay Leno.
Please welcome Diane Lane. It looks like you're wearing, is that a shower head? What do you have on your head?
I'm sure you had some fashion.
You know, I actually,
faux pas
no,
from
I
that
never,
time.
I have tons of faux
Oh,
pas.
I have pictures
but I never,
of
oh, you have a
you.
picture?
There you are. Check out the belt.
That taken over 18 months ago, that photo.
The Tonight Show with guest Diane Lane. Sunday at these times.
Time now for the segment that is sweeping the nation. Buying blind, where we first look at a currency's technical, and you're not supposed to laugh at that, it's true. We first show you the technical pattern before revealing the fundamental reason to buy or sell a particular currency. Now, if you can identify a pattern, you can identify potentially a trading opportunity. So Todd, before revealing the currency you're looking at, what are the patterns you're paying attention to?
Wow, sweeping the nation. I'm a little nervous about this. What we're looking at here is we were talking about a channel earlier in the in the show. I want to show you how a channel is actually formed in the market. So take a look at this chart. It's actually a very orderly chart. So take a snapshot of this in your mind. Go to the next chart. Okay, connect the two lows. That's your first step in constructing a proper technical channel. So connect point 1, connect point 2. Now all we got to do is make a parallel line. We'll put it over on the next chart here. Okay, so now we have a parallel line that's lining up the top swing point. So we have resistance at this channel point. This is saying the market has failed back at the first test of this channel. It looks like it's going to fail for a second time. So this is a good pair to go short. Okay, guys, you ready to know what the nation? You ready to know what this currency pair is?
I don't know if the nation's ready, but we're ready.
Yeah.
Iraqi dinar?
I'll tell you what, turkey's ready.
Pins and needles over here.
All right.
This is dollar turkey right here, okay? And I know it's a rather obscure pair, but it's a great pair. It's the dollar's trading in a very methodical, technical way against the turkey here.
Todd, I love this. I love channels. You know that.
I know
we did
you
it
love
last week
channels.
and had it again. The reason why I like them so much, and the thing too, is like you got to look for a couple of hits on each side of these things,
exactly,
to give it validity. But to me, and we were just talking at the intermission there, was that they help you not make dumb mistakes, right?
You know, they also help you define your risk, which is very important as a trader.
Yeah, both of those things are really, really good. I was just going to say, you're not buying at the absolute top of the channel, so you don't want to do that. You want to be doing the opposite, and you know where your stop losses are. So it just gives you a framework to work with, and I think for traders out there just kind of getting into this is a really sound way of looking at things.
All right, so let's assign some values real quickly to this channel. I think the entry come Sunday night would be 150, 150 to go short, and we actually went short this morning. Stop loss just above that channel as you define risk. Downside target 149.
All right, Todd, thanks a lot for that. I heart channels as well, so you got me. All right, want to learn more about currencies? Go to Currency Classes, our web-only segment that will answer your emails and also give you currency strategies for the week ahead. For that, go to moneynmotion.cnbc.com shortly after the show. Coming up next, the final word from the Currency Pits. Time for the buck stops here. Rebecca in D.C.
If the dollar hops for Easter, if we get some technical pullback, you sell it. Aussie, Norway, Turkey, all of them.
Andy.
It's going to be a thin week volume-wise. Look for better housing data, provide a little bit of oomph for the buck.
Beeks.
You know, we've talked about the dollar a lot. I like the Japanese yen as a short better.
All right, that's it for us. Thanks so much for watching. Remember, your next chance to make a currency trade Sunday, 5 p.m. Eastern. We'll see you back here in 2 Fridays at 5:30 p.m. Eastern Time. See you then.